I want to go ahead and go into our second guest here for the show, Michael Mariani. He is a vice president with Hyde Park Capital and helps to support their mergers and acquisitions and private capital raising, as well as corporate finance efforts across a variety of industries. He is responsible for originating, evaluating, executing, and managing investment banking transactions as well. Michael graduated from Georgetown University with a BS in Business Administration, and he served 6 years in the Army as a field artillery officer, including deployments to Iraq and Afghanistan, before earning his MBA from the Darden School of Business at the University of Virginia. Michael holds the Series 79 securities license for investment banking registered representatives. Michael, welcome to the show.
Thank you, Jamie. Appreciate you having me on.
So tell me a little bit more about your role and what Hyde Park Capital has to offer.
Sure. Well, Hyde Park Capital was founded in 2000. We're a boutique investment banking firm that was founded with the vision of providing very high-quality investment banking services to the middle market. We define the middle market as companies generally with enterprise values between about $10 million and $500 million. So our firm has lines of business in three main areas, which is what makes us a boutique firm. So we focus on mergers and acquisitions, primarily on the sales side. So our clients are hiring us to run a sale process for their company. Mm-hmm. We also raise capital, and that is not friends and family type capital, so what we would call retail raise. That's large amounts of institutional capital, usually $10 million and up. Mm-hmm. And the third thing that we do is what we call financial advisory, which is typically providing something like a fairness opinion for a company's board of directors. Okay. That goes along with the sale process to determine whether a sale price is fair or not to the shareholders.
Okay. Let's talk about mergers and acquisitions in the banking industry first. Sure. Since the financial crisis of 2008, we've seen the failure and merging of many financial institutions. First, what is the current state of the mergers and acquisitions market for financial institutions? Are we seeing some stability here?
I think we are. So, you know, a lot has changed since 2008. So most of the banks have been able to work through their troubled assets. On the traditional banking side, that's led to more stability. Bank balance sheets are very healthy, but it's also important to note that part of that regulation included the Dodd-Frank bill, which increased regulation significantly on banking institutions and some non-banking institutions as well. And so that regulation poses a cost, and one way for banking institutions to confront that cost is to build scale. And so, you know, we expect, as part of that process of growing scale, we expect banking M&A to increase here in the next few years with traditional banking institutions.
Yeah, I can definitely speak from experience just in what I do in the real estate market from the 2010 Dodd-Frank bill. That was a revolutionary bill and probably the most biggest change in the banking industry to come out since probably the Great Depression. Am I right?
Absolutely, huge implications there. I think both good and bad. So, on the good side, I think it did help confront the issue of banking institutions taking excessive risk, which we saw in 2008, what that can do to the system as a whole. Mm-hmm. But also, I think there's been a lot of negatives that have gone along with Dodd-Frank. So one of the points of that bill was to protect the consumer. The problem with that is that when you add a lot of regulatory cost to the system, it typically gets passed on to the consumer. Right. And so, it was interesting. One of the big banks, I think it was Jamie Dimon in his last investment in earnings call, was talking about how they've hired almost as many regulators as they have revenue producers in the company. Mm-hmm. in the last couple of years. And so it's a tremendous cost. And so that cost oftentimes gets pushed down to the consumer level. Mm-hmm. And so I think that's a negative. And then another thing that it's done, and you can see that in the market. So one area that Hyde Park's been very active is non-banking financial institutions. So those would be, not in our case, not payday lenders, but companies like installment lenders that are providing small loans to the underbanked. And so when Dodd-Frank hit, banks immediately stopped providing loans to a large subset of the population. Mm-hmm. And so, and that's why a lot of subprime finance companies have taken off in the last 5 years, is because their population has grown exponentially. Mm-hmm. And so, that's one area that we've seen and worked a lot in is specialty finance, and that's basically been a repercussion of what's happened with Dodd-Frank in increasing the amount of folks that cannot get a loan.
Yeah, I know. Just in my space, I work with the banks selling their bank-owned properties, and I can remember when that all came out between 2010 and 2011. So many policies changed. We got hit with so much more regulation, and there's definitely been a huge I guess impediment to moving some of these properties, I would say, versus when I started in 2007 and 2008 was much easier to sell these properties. But today I feel like I have to stay behind my desk all day instead of getting out and showing properties, and it kind of frustrates some of the buyers who want to see properties. But the regulation is tying me to my desk more and more these days.
Sure, and that's a cost.
Yeah, absolutely. Now, another thing I want to ask, currently the Dow Jones is in record territory, yet the economy is stagnant and optimism seems low. Elaborate on this discrepancy. I mean, is this a great time for investment, or are we operating inside another investment bubble, in your opinion?
I don't think we're in a bubble. I think the market has been significantly impacted by the Fed has engaged in extraordinary easy money policies since the recession.
Mm-hmm.
That's led to very, very low interest rates, near zero for a sustained amount of time. They've been doing a lot of quantitative easing. There's, I think, $1 trillion or more on their balance sheet. And so what that has done is push investors into riskier assets, and I think that's reflected in the stock market. I don't think, you asked about the Dow Jones. I think it is at record highs. I think if you look at it from a multiples perspective, it is probably a little bit overpriced, but not significantly. But
it's just confusing to consumers that we hear about the negative economy. Yeah, we got the Dow at record highs. It doesn't make sense to the average person.
It's bifurcated, right? I mean, the market's being driven a lot by, the Fed, like I said, but large institutional investors. It's not the benefits of that aren't necessarily translating over to the average consumer, right?
Mm-hmm.
In that regard, the market is pretty bifurcated. The Dow is doing very well, but unemployment has been extremely slow to come back.
Mm-hmm.
Wage growth is slow. GDP growth is pretty not very exciting. So in those are the things that are probably going to be the most important to the average consumer. And so I think to fix those is not a matter of the stock market, but more fundamental changes in regulations and taxes and everything else.
Okay. Got to take a quick break here, but stay tuned. Coming back from the break, we'll be talking more with Michael Mariani about some of the opportunities that he's seeing here in the Tampa Bay real estate market with regard to the private equity market. So please stay tuned. And again, you're listening to the Jamie Meloni Real Estate Show here on 1250 WINS WHNZ. Here on 1250 WINS WHNZ. I'm talking with Michael Mariani. He's an investment banker and vice president over at Hyde Park Capital. And Michael, I want to talk a little bit more about specifically the Tampa area and the mergers and acquisitions that you're seeing in the region. You're saying it's a very healthy market. Tell us a little bit more about this and why that is.
Sure. Well, I think for some of the reasons that there's a couple of reasons. There's I think macro reasons, and then there's always company specific more micro reasons. And from the macro side, one of the key points is what we were actually talking about before the break. So there's a lot of easy money right now. The cost of debt is very low, and so when that happens, that is generally good for sellers because buyers can pay more because they can borrow more. Mm-hmm. And so that has been a good driver of the M&A market recently. And other things, if you look at it from a strategic perspective, GDP growth has been pretty slow. And so because of that, organic growth has been pretty slow for companies. And so a lot of them are looking to M&A as a way to increase their growth.
Now, what's keeping the cost of debt low? Is it just the Fed's interest rates is so much tied to that low interest rate, or where are the sources of the funds coming from the investors that are putting out the money?
Sure. Well, primarily on the debt side, like I said, the cost of debt is very low. That's partly because of the Fed. Mm-hmm. It's partly because banks have sort of righted their balance sheets and are being aggressive about making loans. On the equity side of the balance sheet, so there is a lot of capital on the sidelines right now. So both strategic buyers and private equity groups have a lot of money to put to work. So on the private equity side, there was a lot of funds raised around the 2008, 2009 vintage that, because of the downturn in the economy, didn't get to put a lot of that to work. And so they need to they need to use that money or return it to their investors, and generally they don't want to return it to their investors. And so there's a lot of private equity capital on the sidelines. I think in the U.S. alone, it's estimated at between $400 and $500 billion for private equity. On the strategic side, there's a lot of cash on balance sheets is near historic highs, and so that all bodes well for sellers in the sense that there's a lot of dry powder on the sidelines. And then also going along with that is that there's in the deal market, what we've seen at Hyde Park Capital is that there is we call it a supply and demand imbalance of good deals. So there's not enough deals to meet the demand in the market. And so for quality companies, that helps push multiples higher because there's competition for good deals because of that imbalance.
What type of companies are in demand out there? I see that you specialize in healthcare, financial services, and technology. Are you seeing opportunities in all three of these areas? Is one better than another?
We're seeing opportunity in all of them. I think we sort of equate the health of the market to deal volume. And I think if you look at deal volume, certainly the highest is in either technology or healthcare. At Hyde Park Capital, we've been very active in healthcare. That space is going through a lot of changes right now, a lot of M&A across the board. And so the Affordable Care Act has actually very similar to what we were talking about with Dodd-Frank and a lot of regulation. The Affordable Care Act has changed the landscape a little bit, and I think the threat of reimbursement decreases and some of the things that's going to do to the market has provided an impetus for companies to try to gain scale through M&A. Mm-hmm. And then also if you're so one area we've been very active in is with selling large physician practices. And if you're and those types of groups are being confronted by a lot of different buyers because both from the hospital side and from the insurance side, because all those types of healthcare providers want to get basically as close as possible to the patient, control the patient as much as they can, and so the way to do that is to actually own the doctors.
Now, take us just briefly through an mergers and acquisitions. You say M&A, that's mergers and acquisitions. Does the seller approach you usually? Does the buyer approach you and you go out and try to broker a deal, or how does it work?
Sure. It works both ways. About 70% of our transactions are on the sell side, so we're working for the seller. The company decides that they want to run a M&A process, and which we feel is by far the most efficient and effective way to maximize their price and terms. And so they hire us to run a process for them. And what we usually plan on is a 6-month timeline. It can be done faster. In a lot of cases, it kind of depends on the client. And one thing that's important with this topic is that we encourage clients that are interested in doing an M&A process to start thinking about it as early as possible. The earlier, the better, because they're going to want to do things to prep their company for a sale process, like ideally have audited financial statements, set up a virtual data room with all their key, legal and operational documents, and all those things will help the deal happen faster.
And you're saying the Tampa market right now is a very healthy M&A market, though. You made that point earlier, correct?
Sure. For the same reasons that we talked about, I don't think of M&A as being very regional, at least in the United States. But Tampa is a quality area. There's, especially in the middle market, there's a lot of great companies out there. Florida is, especially on the healthcare side, actually, this is more regional. Florida is growing and growing pretty fast, and so that makes this market attractive to a lot of.
How do you think the announcement last week of Bill Gates' involvement in Channel Side is going to influence? Obviously, that's going to have a positive impact upon business owners in the Channel District. Correct?
Absolutely. That's that Cascade is Bill Gates' family office, mm-hmm. And so I think where they're putting, they've done very well. There was an article in the Wall Street Journal about them, I think, last week, but they've had a good return, and so whenever you're backed by by somebody like Bill Gates, that's a huge stamp of approval. So that's important.
Are there any other local factors in the Tampa region that are specifically driving the mergers and acquisitions opportunities in the area that come to mind, or is it just overall the economy is just doing much better and opening up some opportunities right now?
Yeah, I think with the exception of probably healthcare, which is probably more regional, I think in the areas of industrial technology and financial services, where Hyde Park Capital spends a lot of time, I think the M&A market is less regional. So I don't think it's specific to Tampa, but the macro, the fundamentals for a good M&A market are very strong. Okay. And so sellers are seeing very high multiples historically. Okay,
so we talked a lot about Hyde Park Capital's role with mergers and acquisitions. What are some of the other opportunities that people listening here can contact Hyde Park Capital for as well?
Sure. So the types of clients that we work with are so we're a registered broker dealer, but like I said, I think at the beginning we focused on three areas of expertise, and that's M&A. That's our most active. We're one of the most active boutique investment banking firms in the Southeast. We also do capital raise engagements, so that's usually $10 million and up, and so companies that there's usually a large equity component to that as opposed to debt. So companies that might be looking for growth capital or partial liquidity for owners to potentially go along with growth capitals or some mix thereof. That's something that we do a lot of, and then financial advisory as well. So fairness opinions for companies that are being sold. Our average client is probably north of. We measure it by EBITDA, so earnings before interest, taxes, depreciation, and amortization, or pre-tax profit is an easy way to look at it. So we usually work with clients that are $2 million and up in that department, so not early stage or something like that, but growth companies, large private, small public companies.
Yeah, I was looking over your website, which is hydeparkcapital.com. Am I correct? Hydeparkcapital.com. You got a breakdown of all of your recent deals, probably all your historical deals as well. It seems like you're very involved in the region.
Yeah. I think we average probably 7 or 8 sell side M&A transactions a year, which is pretty active for a firm of our size. We're a boutique firm, and so it's an area where we have a lot of expertise. All of our senior bankers have experience at large bulge bracket firms, and so again, that was sort of the vision for our company, is providing bulge bracket, very high quality services to the middle market.
Well, Michael, a lot of great information. Thank you very much for coming in the show. Glad you stopped in today.
Thank you for having me and enjoyed it.
Thank you very much. And if you're just tuning in, you've been listening here to the Jamie Meloni Real Estate Show here on 1250 WINS WHNZ. And again, you'll find my show on every Mondays at noon. So I invite you to please tune in, as this show aims to become your information source for the Tampa Bay real estate market. We are talking with Sid Haram Hassan and Lauren Campbell, founders of CUPS, the Channel District Urban Professional Society, about the Channel District today on the first part of the show. And we were just talking again with Michael Mariani, investment banker and vice president over at Hyde Park Capital. Catch all of their information up on the Tampa Bay radio site after the show, and I will see you all again here next Monday at noon on the Jamie Meloni Real Estate Show.